Join us now with more on the markets. Lori, do you have a pick, Lori? Calvasina, head of U.S. equity strategist.
On the song, I mean, my children torture me with Cars for Kids, so I was kind of cringing off air earlier. Sorry.
That might be the worst.
That is the worst.
Little brats are not playing. They're not playing those instruments. They're just moving. It drives me. I'm never giving my car to them ever because of that. No, maybe I will. Data, we're missing something, aren't we? It's like we don't know what to do. The old narratives have faded. I don't know if there's going to be a recession. I mean, the Fed, maybe one or two more hikes. So there's a vacuum of info, so people don't know what to do. Is that your? Yeah,
I mean, I was talking to a couple clients last week, and we were sort of comparing notes on conference season, and I was saying, I haven't heard, a whole lot of buzz, and I was pretty annoyed, frankly, at the last earnings season. I read through a lot of transcripts. I didn't feel like I learned anything new. And the clients I talked to, they're like, we kind of feel the same way about conferences. They've been to a lot, and they're like, we just didn't learn all that much. And that's disappointing because normally that's where you really get a lot of color this time in the year is from those conferences.
It's not that they're lying. They just don't know what's happening. Right?
They don't know. And, if you think rewind to last year, right? We were all talking about inflation and supply chains, and companies were like, hey, this is what we're doing to work around this problem. Hey, we're passing along prices and people are taking it. We are starting to hear a little bit of squishiness on the pricing discussion with some companies saying, hey, costs are coming down. It's going to be harder to pass these costs along. That's about the only new incremental thing I've been hearing.
But you're not gloomy long term. You can find things you like and you're doing things.
Yeah, look, I think that one difference between me and maybe some of the more, bearish strategists out there is I feel like we're coming out of something, not heading into something. And I think we're still in this very kind of messy post-crisis normalization period. Gone through this before, 2002, 2003, 2010, 2011. The market was constantly afraid we were going to tip back into a recession. There were excesses from the prior crises that were blowing up left and right. And there was just a fragility and confidence. And that's felt very similar to me this time around. So it helps keep some perspective for me.
We were going to have a recession for sure. Then we weren't going to have one for sure. Now we're kind of like open to the idea, but we don't know. Maybe 2024. Is that the year we'll see more?
So I watched the GDP forecasts around the street pretty closely, just the consensus expectations, and we've sucked out the negative GDP that was anticipated for the end of this year. It's now kind of slightly positive, and you're not seeing that really move into 2024 yet. We've seen actually a little bit of optimism on the 2024 full year numbers. So I think at the margin, the street is telling you it thinks the recession has been avoided, not just delayed. From my perspective as an equity strategist, I think we bought it last year. I think we already paid the price for it. So, does it matter if we have one? Of course it does, but maybe not as much as people think from an equity market pricing perspective.
2023 was supposed to be the year of kind of like a flat S&P, and then 2024 was going to be when we resume double-digit growth or whatever. Is that still going to happen, or will 2024 also be
I think 2024 is going to be determined by what we think is going to happen in 2025. And the same way we baked in the supposed 2023 recession back at the October 2022 lows, we found that the market is just moving well ahead of earnings trends right now. So we basically already baked in a pretty sizable earnings recovery in 2024 next year.